This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. What is up, everybody? Happy Thursday. Even though it really doesn't feel like a Thursday, at least for me. This is my first day back in the office. Was out of town for the 4th of July, so good to be back with everyone. Thank you for everyone who's tuning into Benzinga Live. I see Donnie Doit in the chat talking about, this is really what's been top of mind for me all day, Donnie. So essentially, where we're at today, if you're just tuning into the markets, if you're just waking up, things are down today. Things are looking down, but then if you read the headlines, you might think, why are things down so much? Everything seems to be going pretty well in terms of the economy, right? We've got some good economic data that we will go through this morning, and yet the market is trading down. So we're still, dealing with this kind of like, is good economic news bad for the stock market? And we'll talk exactly why, this is going down. Essentially that, with this strong jobs data, and we're going to get more jobs data tomorrow, showing that, okay, maybe we aren't as close to a recession as some people thought, but that also means the Fed will most likely keep interest rates higher for longer, which I've talked about this before. And I mean, it's almost silly in a way to, think like either way you look at it, right? You could have a bullish outlook. You could say, okay, on one side, yes, the market's going to move lower with higher interest rates, but the underlying economy is strong. And you can say, okay, I'm going to buy U.S. stocks because the underlying U.S. economy is strong. We are going to be okay, etc. Or if you wanted to view it from that more bearish lens, you could really be like, with the higher interest rates, eventually that economic growth will slow down. Eventually we will get to that point, where the higher interest rates are impacting the labor market, are impacting the growth of companies. But for right now, it seems like the U.S. economy is just chugging along. Personally, this is my opinion, not, what's going on in the market. This is not objective. This is just my opinion. I do think right now, with the stronger underlying economy, I would be viewing these dips, especially for someone like myself that might have more time, a longer time horizon when I'm investing, view them as buying opportunities. Again, I want to buy stocks while the U.S. economy is strong, while we're, and that's one of Warren Buffett's biggest things is he's like, never bet against the U.S. economy over the long term. Sure, will higher interest rates, if the Fed keeps raising, eventually start slowing down the labor market? Will you start seeing some of these ripples throughout the economy? Yeah. But right now we haven't. And that was the biggest thing from when the Fed started raising interest rates. I don't even remember. I think the first one was March 2022. So now we're like a year and a half almost away from it. So when the Fed started raising interest rates, you had all these people, economists. You had Jeremy Siegel from Wharton on CNBC basically saying the Fed's going to engineer us into a recession, bringing interest rates up to 3%. That didn't happen. We didn't start heading toward a recession when the Fed started raising interest rates. We still haven't, and the market is still pricing this in that this is going to happen. But it hasn't happened yet. So we are going to see, I think, eventually, an economic. As long as the Fed is able to keep raising interest rates for longer and higher than initially anticipated, yes, eventually we will run into that spot. But the market's pricing that in as if it's going to happen tomorrow or next week. And I don't really see that to be the case. But definitely bears in control today. We've got a couple guests hanging out backstage. I see my man Steve Kalajian. I'm going to bring him on in a couple minutes. After that, we'll talk to Nick Brown about some of the top headlines of the day. Then later in the show, we'll be bringing on Rob Roy. We're talking some options, talking some Fibonacci. It's always good to catch up with Rob, see what kind of trades he's been making. So without further ado, let's go ahead and bring Mr. Steve Kalajian on, see what Steve's been watching, see what Steve's been trading. Mr. Steve, how you doing today?
Okay, join session, click one runs, URL launch, Windows install.
Steve. Can you hear me? It seems like Steve was on another call. Let's switch it up then. See if my man Nick Brown is ready. All right. Pump fake
I'm
to
ready.
Nick. How you
I'm
doing?
always ready.
I know you're always ready. All right, give me your top 3 headlines of the day real quick, Nick.
ADP came in stronger than expected month over month, the best increase since December of 2022. DoorDash, Uber Eats, and Grubhub sue New York City over minimum wage law. App says new pay calculus is flawed, will raise consumer prices and limit worker flexibility. And we got the Fed minutes. They were out earlier yesterday, 2 p.m., basically saying that almost all officials noted in September that additional rate increases would be appropriate in 2023. Most officials said additional information valuable for considering stance of policy. And the staff sees mild recession later this year, followed by moderately paced recovery.
Got it. So what? I mean, like, let's talk about number 1 for a second because that's the biggest right now. So the strong ADP numbers, like you said, going back to like December 2022, the biggest hop. I mean, things are looking good in the economy, and like I said, I mean, the market's trading lower right now. I think it has a lot of people not perplexed because I think people understand why, just with this fear of interest rates rising and whatnot. But I mean, Nick, to you, what would you, I mean, like, do you think we should be rooting for the jobs numbers to not be so good? So that means that the Fed won't have to raise? I mean, that seems like counterintuitive, doesn't it?
Yeah, I guess we could call it we're back to good news is bad news again, just because of all this data. But J.P. Morgan writes this morning, ADP has generally not tracked BLS private non-farm payrolls that well over time, but today's report does hint at some potential upside risk to our call for 165,000 gain in private payrolls, 200,000 a headline. Goldman says we suspect a distortion in the ADP seasonal factors contributed to the strength as ADP employment growth had picked up in June in 6 of the last years. We left our non-farm payroll forecast unchanged at above consensus, 250,000 ahead of tomorrow's release. It goes to this point where I think it was a few years ago where we've been tracking ADP up, beating expectations. BLS is normally, the non-farm payrolls is normally down, or vice versa. That hasn't been the case. And so we've continued to beat these expectations. We expect, an unemployment rate of like 3.5% tomorrow. I think 220,000 could be an estimate tomorrow for the jobs. But we're going to have to see how all the economic data pours in. We also have to watch CPI, PPI. I think it's the PC core deflator and the deflator. That's one. We're also going to have to watch the beige book. That comes out on Wednesday of next week. Just basically looking at what the Fed sees. And we're going to have to see where the Fed members take us, because I think the Fed members are going to be hinting along the way where they see them going in July.
Yeah, I mean, right now, like you said, Nick, we might be back into this good news is bad news for the market, which to me, I think everyone out there right now, you have to consider your time horizons. We probably have people watching this show that aren't maybe investing as much, just long-term buy and hold, let it sit investors. Maybe they're trading a little bit more. So, you really need to look at some of these things coming out, try to play them, try to anticipate, okay, how is strong economic data going to impact the market? How is weak economic data going to impact the market? How is just right economic data when you're talking about trading? When you're buying and holding long-term, I really do think these types of dips where, it might not make much sense, right? Like when the market dipped when COVID first hit, in hindsight, right, that was a great buying opportunity. But at the time, it made sense why the market was moving lower. The entire economy was being shut down. Companies were, shutting down factories, having people not come into work. There was so much uncertainty out there. It made sense why the market was dipping. On days like this where the market's dipping with the underlying economy is strong, again, I know there's that explanation. I know there's a reason for it, but I think you could make the argument that for buy and hold investors that this is, these are great buying opportunities because you do have that strong underlying economy. You do have that time on your side. So again, times like this, I still see, I still see the market outlook being strong. I still see the economy being strong. I don't know why I would treat this other than anything else than buying opportunities.
We always could say we could attribute it to a healthy pullback. I mean, the market has been going up quite substantially the last few weeks, and it may be just that time where you need to do a little bit holding, a little bit of selling just to get that healthy pullback, because we've seen numerous stocks continue to run up constantly, making 52 week highs like almost every day. And eventually it's going to be, it's just, you can't repeat the pattern. As they say, past performance is no guarantee of future results. You just can't keep getting new high every day in Apple and the Microsofts and the Nvidias, and even in other sectors and other travel names too, and big tech names and oil names. You eventually have to have that healthy pullback to say, we know what a market is. We just cannot keep running up constantly. Eventually there's going to be bad news on a day, but you also could sell on the good news, just because buy the rumor, sell the news. It could be the opposite. You sell on good news and then you buy on bad news.
100%. Well, all right, Nick, I just got word from Mr. Steve Kalajian that you got his audio working properly now. So I think I'm gonna pop you off for a second, bring Steve on, and then later in the show, bring you back on. So get us ready to go with some more headlines, anything you want to talk about.
Perfect.
All right, awesome. All right, guys, we're going to go ahead and bring on Mr. Steve Kalajian, see what Steve's been trading. Again, we'll be talking to Nick again later this show, so if you've got any questions or anything you want Nick to look into, just let him know in the comments. He'll be in there reading the chat. But without further ado, let's go ahead and give Steve that special Zinger Nation welcome and bring Mr. Kalajian on the show. Hi, Mr. Steve. How you doing?
Hey, Aaron. How are you? Good morning, everybody. Thanks for my volume wasn't working. I had to get it fixed. So, but
all good. Well, we're good. We're good. We're happy you worked through the tech difficulties. Glad to have you on now. So, Steve, it's been a couple weeks since we've had you on. What have you been trading? What have you been up to?
Well, we had this on the bigger time frames. We had a really nice buy divergence. S&Ps got down to that 43.68, and they made new highs for the period of 6 months. They got above the 44.90 level, and from there, I just saw nothing but monster sell divergences here. And I do think we're going to start making lower highs. Ultimately, I was looking for 3,200 on the S&Ps. I'll probably look for a double bottom around the 3,500, 3,600 range in the next, 4 to 5 months. What the catalyst to this is going to be that I just still believe that we're not out of the woods. I do believe that the inflation numbers are significantly higher than what's being reported. When you take out food and rent and energy, I don't know where people live, but rents are going through the roof. Just talking to some friends of mine back in New York, I don't understand it at all. But overall, fuel is still relatively high from where it was a few years ago. I'm going to be going into right now. We're in summer months here, but overall, the way I look at the market is purely all technical, and I do believe that the next push up, the Nasdaq is going to be the way to where the money is going to go. I'm not a fan of the Russell. I think the Dow is going to lag. I think the Nasdaq is going to significantly outperform. I mean, look at this monster run up we've had on the Qs. Now, I do believe that before the market can take off, the Qs need to close the gap at the 280 level on the bigger time frame, and which will be a higher low. And once that gap gets filled at 280, then I believe we're off to the races.
Yeah, so you're looking at the Qs, basically looking at this, chart right here. Kind of looks a little double toppy, but say we get a pullback and the market does start going back up. You'd rather be playing the Qs on the way up instead of, say, the S&P or the Dow or
the S&Ps will follow, but I think the Nasdaq is going to outperform the S&Ps and the Dow and the Russell going forward.
Yeah. It does right now. I mean, tech has we've had this incredible run, whether you're looking, of course you have your ones like Apple that recently was hitting new all-time highs, Nvidia, basically all these tech stocks that have just been, crushing it this year. Finally, looks like today we're getting a little bit of pullback, and I think there probably are a lot of people right now, Steve, that might see this as kind of like rolling over. Maybe a little bit of the
Yeah,
steam is rolling out. But to me, like if everyone is thinking that way, if everyone's looking at this QQQ chart thinking, okay, yeah, we were finally hitting the top here, double top, and people start trying to buy puts or go short, like I don't think it'll be
I'm not.
that easy to predict the market.
Yeah, I'm not look. I'm actually bearish. I mean, I'm not bullish here at all. I think the weeklies have to do some work and get some decent pullbacks here. Um, you know, a couple weeks ago when I was on, you showed the put call ratio. Well, over the weekend, I must have seen at least half a dozen articles of a new bull market has started, and this is death. And when I see things like that, I'm a contrarian by nature. But again, I don't really. That's how I don't trade like that. I basically look at my work, and my work told me that right near the 44.90, 44.95 level, market was going to get kabooshed, and we did. We dropped about 70 handles so far off the high on the S&P. So I still believe that I really like to see a double bottom put in, fill those gaps below, and then take off to the upside.
Yeah, I mean, so Steve, do you have any individual names that you've been, putting
Well,
bearish?
you gotta buy the names, the Apples. You gotta buy the Metas, the Oracles. You gotta buy. In my opinion, I would look to be lying the QQQs or the TQQQs, which is, I think 9 times or 10 times lower than the QQQs. And I would look at names like obviously like Nvidia. The same. Everybody's in the same crowd, but I wouldn't buy them here though. I'd be buying. Tesla had great earnings. I think Tesla, if it gets back down to the low 200 level, I think names of that magnitude. Amazon is up about 50 points off the low, so I'd be looking at names like, if Amazon gets down to like the 105 level, 105, 108 level. But I mean, these are, I'm looking for a very sharp pullback here. I think the market got way ahead of itself with this AI craze. And I think you sell into that. When you see Nvidia go from 125 up to 437 or 438, I mean, that's insane. And all predicated when you see AMD go with horrific earnings from 81, it was trading, and then gets up to 132. I mean, these are names that, again, I would be buying. Apple's my favorite, and because of the fact that it made the new high for the year, I mean, all time new high. They have significant amount of cash on the balance sheet. I think that 125 or 128 low, that's never going to be seen in the next couple of years. But I do believe if we get a pullback in Apple to the 65, 75 range, 170, 65, 175 range, it may be a great time for a long entry in that range. Again, but I'm looking for the Qs to fill that gap at 280. I'm not bullish until that gap gets filled.
Yeah, I mean it's with Apple, and again, this is I'm kind of joking here, but Apple just really does seem like, I mean, at least in the 10 years or so since I've started following the market, like it's just Apple. You can just buy it at any pullback, any weakness, you can just buy Apple and you would have been rewarded again over at least the past 10, 15 years. Of course, now maybe that changes. Maybe you buy Apple here at 190 at all-time highs and you don't end up making money for a few years. I don't know, but Apple just to me has been one of those companies historically that has just been so strong, such a monster that I mean, it's my biggest holding in my long-term portfolio. It's been that way for a while. There would have to be a lot of fundamental changes, things going on within the business or overall tech world to make me think otherwise than the fact that Apple will continue to be a good investment down the road.
The other thing is, with this AI craze led to a gigantic short covering rally. So a lot of these hedge funds were short a lot of these big names too, So when this AI craze started happening about 5-6 weeks ago, the S&Ps were around the 40-50 level, 40-80 level, and it just ran 300, almost 400 points up. So that's a staggering move. And these funds, a lot of these hedge funds got caught short.
Sorry, what was that one more time, Steve?
So I said what also fueled the move up is, when these AI stocks started going crazy, a lot of these funds, hedge funds, were short a lot of these big names, right? Thinking for another big push down. And we never got it, right? With these AI stocks exploding. And you started seeing a lot of these funds also starting to, cover shorts, which fueled on top of the AI craze. So you had the AI craze and you had the massive short covering by these hedge funds.
Yeah, I mean, I think with the AI rally, you had these stock like Nvidia, for example. Like once that got a little bit, seeing Nvidia like a very much a high tech growth stock get to these very overextended levels with interest rates the highest they've been in 15 years or so, I think made a lot of investors, basically just be like, look, this thing can't keep going up. And like you said, putting short positions out there, and then you kind of had this AI rally fuel the whole entire market, not just very small, not just individual names. It was almost like the entire QQQs were being propped up by this AI rally.
Again, I'm not saying we don't. I think it's still early. I still think we're in the on deck circle or top of the first inning on this AI. I don't know what the future lays with this, but Elon Musk wrote some pretty interesting things about it. He's really not a believer in it. I think, just go back and look what happened 5 weeks ago, Aaron, right? The S&P's dropped 30 handles, okay, 30 points on the S&P in one bar because somebody with an AI capability posted a Pentagon blowing up, right? Come on. Is this, are we going to have to, every time you have a position in the market, hold your breath that some AI bot doesn't post something negative or positive in the market? And how do you know, like, somebody wasn't short like 500 S&Ps and then put that out there and had bids all the way down? I've been doing this for 40 years now, August 1st, or 40 years. And how do you know that markets can't be rigged now based upon AI? If you saw an S&Ps drop 30 points literally in 4 minutes, right? What is it? What regulations? Who's going to monitor this? SEC doesn't have the capabilities to do that. This could be the new world we're living in, where a guy could be long 1,000 S&P contracts, post something great, and boom, have offers all the way up. You ever think about that? I do every single day. That whenever you see the way news during the election of 2022, every time somebody tweeted something, the markets move 20, 30 handles each way. Now imagine now you have AI coming out, posting a fake picture of the Pentagon blowing up, right? And then boom, this is the world we can probably have to live in now going forward.
Yeah, I think things like that, it'll take a while to kind of like, we're going to see AI as more, impacts on the markets for a while. With that said, machine learning algos and stuff have been influencing the markets for a number of years already. So it's, I think it's going to be one of those things that we'll see how AI develops, how the market is going to react to these things. But 100%. So, Steve, real quick before I let you go, let me get, I guess if you had to pick a couple stocks that you wouldn't mind buying on a pullback if they do pull back here, or maybe
I think
ones
Oracle is my favorite of the bunch. I think it fills that 09.5 gap, and I like that Oracle, especially after the blowout earnings. That's a breakaway gap break. That's a so I think that if Oracle gets into the mid to 105, 110 area, I think that's good for a nice pop. I think the high was what, 126, I believe, or something like that. So I think Oracle is one of my favorites on that pullback. Just because even if the market goes down, it doesn't mean you're going to test those lows in the low 80s, or what was that? I can't see the numbers, but I don't think those lows are going to be touched in Oracle. That's one of my favorites. Apple's my second favorite since it made an all-time high. So you like to buy, pull back, especially on that stock. I would wait for a really great pattern on the weekly chart on that one, which I watch all the time. So those would be my two favorite. And again, ultimately, I'm a buyer of the NASDAQ. I think of the 4 ETFs, the Spiders, the Diamonds, the Russell, and the Qs. I think the Qs are the one to place your money at.
Well, there you have it. All right, Steve. It's good to get you on the show. Good to have you back on after a couple weeks. We'll chat next week. But there you have Steve's takes on the market. Steve, as always, it's great to talk to you and hear your insights.
Thanks, Aaron. Have a great day, everybody. Thank you.
You as well. All right, folks, let's go ahead and bring my man Nick Brown back on now. Nick, give me let's see what else Nick is watching.
Threads. Are you on Threads, Aaron?
I am not. I have not made a Threads account. I haven't made a Blue Sky account. I haven't made any other thing. I mean, I'm still on Twitter, Nick. Am I dumb to still be on Twitter? Should I still be posting on Twitter? Do people still go on Twitter? I have noticed, Nick, I don't know if you've noticed this for your account. I've noticed I've been hemorrhaging. I've been losing followers on Twitter over the past couple weeks at a pretty concerning rate.
Yes, you're not the only one. I actually experienced that over the weekend, long holiday weekend. I lost like 10 followers, 20 followers over the whole weekend. And I'm like, what's going on here? And it could be the bots. They've taken over Twitter. So it could just be bots getting banned. It could just be people migrating, deactivating their account to a new social media platform. There's Post News, there's Blue Sky, there's Mastodon, and now there's Threads. And so, Aaron, I don't know if you know what Threads looks like, but I actually do have Threads on my phone. Now you can't access this on the website, but here's what it looks like. I don't know if you guys can see that, but that's the new Threads app.
It looks similar to Twitter.
It is. And so you notice how the retweets and likes and the comment, it's basically Twitter 2.0, but they reversed the button. So on Twitter, it normally goes comment, retweet, like, bookmark, and share. On Threads, it goes like, comment, retweet, share. So they've mixed it up and trying to be this Twitter 2.0.
Got it. So, I mean, in terms of like your feed right now, is it pretty active?
So one big question people were asking is for Threads is, are we eventually going to be able to get a timeline just for the people you follow? Currently, right now, Threads is a mixture of people I follow and I don't follow. So I'm just getting content randomly spewed right now on my platform. Yes, there are from people that I follow, but a lot of the times it's from people that I have no clue who they are. I've never seen them, never heard them, that are just migrating to this platform. And so that's one big feature people want. Another feature is, are direct messages going to be coming to the platform? No word yet on if they will, but I'm pretty sure they will be. And Zuckerberg was actually active last night on the platform for a while, basically saying in the long run, this is going to be a new social media platform. And so CEO Linda Yaccarino actually put out a tweet a little bit ago, basically pushing back on this because, Twitter is the real news platform, where Threads is basically an Instagram picture, Twitterverse, whatever you want to call it. You can just put anything out. And so what basically Linda is saying, and she's really pushing back on this just because they don't want to lose followers. She reads, quote, "On Twitter, everyone's voice matters. Whether you're here to watch history unfold, discover real-time information all over the world, share your opinions, or learn about others, on Twitter, you can be real. You built the Twitter community, and that's irreplaceable. This is your public square. We're often imitated, but the Twitter community can never be duplicated."
Yeah, and I do think there is kind of this like weird culture associated with Twitter that like, it's gonna take a lot for Twitter to truly die out, because I think there are a lot of people, especially in media, who have been living on Twitter essentially for the past 15 years, that it's not going to be that easy to just kind of like, pack everything up and go over to a new platform and act like, it's going to be the same as Twitter.
Yeah, it's going to be very interesting to see what Twitter is now going to do to lure people back in. I don't know if you know, Aaron, but pretty soon you won't be able to access TweetDeck, the new TweetDeck web app, until you're verified. You'll get 30 days, and then you'll have to pay $8 a month to get the new TweetDeck
What is
web app.
TweetDeck, Nick?
So TweetDeck is basically where you can customize your Twitter. You can make columns of different journalists. You can combine and make it a whole news feed. It's basically up to you. And so what now the new TweetDeck web app is, it's basically combining old TweetDeck and old web app and combining it all together. So you can basically you're basically upping your level. You can customize your own news feed. You can say, hey, I only want this person's tweets to show right now. And you can have just one column. It's basically up to whatever you want.
Got it. Well, I might have to check that out a little bit.
I mean, 30 million people did download Threads as of last night. Zuckerberg giving that update roughly about 40 minutes ago. 30 million people on Threads currently.
Yeah, and I mean that's the one thing is I think a lot of the different, problems that people have with Threads, at least especially in the very early stages. Let's keep in mind, right, that Meta has a lot of resources so that if people are all complaining about this aspect or this feature of Threads, I feel like very quickly they will be able to get some of these things fixed and maybe improve the user experience again very quickly. But what, in my opinion, will need to happen is there will need to be a lot of like noise around that will have to be moved quickly. Like if Threads looks very similar to what it does now in 6 months, I feel like it won't gain that much traction. But if Threads can prove as a social media site, as a product, that they're willing to kind of, come out here and change these things and appease what the people want, then maybe it will start gaining some traction.
Well, that is one point too. Right now, I don't think you can advertise on Threads. And so people like the big companies, Adidas and Nike, and so all these companies that like to advertise, right now advertising isn't on Threads, and there's no word yet if it's coming soon. I have heard from the platform, from seeing the different threads and hearing from different media reporters basically saying coming, that the ad spending and the advertising isn't coming to Threads anytime soon. And they're pointing out that actually could hurt them in the long term, given Twitter, you can advertise. And so that's going to be, and I heard this term on CNBC, one of the media reporters was citing a writer basically saying, in simplest term, this is for Linda Yaccarino to get her ducks in line, to get Twitter in line here, to see what they can do to lure people back. Because the $8 basically, with the rate limits and this $8, I think the $8 is going to hurt them, just because TweetDeck is a powerful tool that traders, day traders and investors can use, and probably may end up paying that $8 just because the real-time information. And that's one key thing, is Twitter is real time where Threads is not. And I think that also could be a lot of back and forth. But in the long term, Mark Zuckerberg tweeted last night on Twitter, his first tweet since 2012. This is what he tweets. It's a Spider-Man. It's the emoji of them fighting. This was last night for the first time after his platform launched. In the long run, I'm not sure who's going to be winning this competition. I think it's going to be back and forth, up and down for both companies. But if I had to pick a winner, I would go Mark Zuckerberg.
Out of, you're saying Elon versus Zuck, who's going to win this social media race?
I'm
All right,
Zuck.
That's a hot take. Well, I mean, are you taking the same in the combat fight? Is there an update on that, by the way, Nick? Is this actually going to happen?
Elon's mother is trying to call it off, but this new Spider-Man emoji is really urging them to fight if they are going to fight. Benzinga, of course, should be the host. We can anchor, Aaron and I. We can do this. We can go to the battling match. But I don't actually think they're actually going to fight in a cage. If they did, I don't know why we would harm. And that's just basically saying, hey, two rich people, let's go fight. I don't think that's eventually going to happen. I just think it's a long-term battle in between companies and different companies. So you'll have to watch the social media stocks like Snapchat, have to watch Meta, and all given how is Threads going to incorporate AI? Are they going to incorporate AI into Meta, into the Facebook world, to see if they could speed up this new Threads app? There are a lot of people that I do know that are basically on Threads for the day. They said, we're giving Twitter a rest. We're going to take to Threads, see how it goes. I made my profile last night, currently at 21 followers. So I'm posting on it. It looks like you are getting engagement. It is more of the community where you're not seeing bots, you're not seeing rate limits. But on the other hand, you're not seeing real-time news information. Just because the major news outlets are on there doesn't mean we're getting real-time news information. Where on Twitter, you're getting the real-time news. You're getting more updates than you were than Threads are.
Yeah. I mean, again, like I think there's been a lot of things with a lot of Twitter power users that have maybe been using the app for years and years and years that I've noticed in the past. I mean, what was the thing a few days ago where they started limiting the amount of tweets you can even view if you weren't like a subscriber, Nick? I don't know if they continue to do that, if they shut that down pretty quickly, but a lot of these kind of, it feels like fundamental changes of Twitter people aren't happy about.
Yeah, there was reports last night. I believe they removed the wall where you can actually view Twitter logged off, but you won't be able to see the threads of it. You'll only be able to see the first tweet, and if there's a thread, you'll have to log in. But it's going to see rate limits. Why are they're trying to say that they're trying to do this in the long term to get the bots off the platform. Believe it or not, even though I pay $8 a month, bots are still sky high, and there are the certain words that I post, certain tweets that it's like, here come the bots, and they're just flooding my notifications. And that's something in the long term I don't want, you don't want probably, and many people don't. And Threads right now, as of now, there are no bots on the platform. We're going to have to see if that is still going to be the case tonight or tomorrow, and see where Threads get us in the long term and how that's going to impact Meta's revenue and EPS. I'll be very interested to hear when they report earnings, what their guidance, what their commentary is on Threads, and what Zuckerberg has to say.
100%. All right, well, Nick, I see my next guest hanging out backstage. I'm gonna go ahead and bring on Rob Roy, see what he's been doing. If you want to hang out backstage, we can do a quick recap at the end after Rob, and then we'll wrap up from there.
Alrighty, I'll be back.
All right, sounds good. Well, thank you again, Nick Brown. Everyone smash the like for Nick, always coming on with informed with the top headlines of the day, giving us his takes. Nick, again, we'll talk to you in a few minutes here.
Okay, perfect.
All right, y'all, we see Mr. Rob Roy hanging out backstage. It's been a couple weeks since we've had Rob on, so without further ado, let's go ahead and give Rob a very special Zinger Nation welcome and see what Mr. Rob has been trading. Mr. Rob, how you doing today?
Aaron, I'm great. How about yourself?
Good, man. How are you?
I am fantastic. Life is good. Gorgeous day out. Some interesting stuff happening in the market. So all is good.
Yeah, so let's talk about the big headline of the day. I mean, we got this strong jobs data this morning from ADP that seems to be, we seem to be back in this good news is bad news for the market, right? I mean, now all of a sudden this means the Fed's going to rate hikes to 8.5%. I don't know what the market. It seems like I don't know what's going on, but walk me through your take.
Yeah, so I think there's still a lot of confusion as to where the Fed goes. They've not given us any clear definition, right? When Powell spoke the last time, he said, "Don't take this us not increasing rates this time as a pause or anything else. It just gives us another chance to review the data." So personally, I still think we've got one for sure. I'm pretty confident we'll get a second one yet this year. And I think they're done at that point. I don't think we're going to get much further than that. We've got earnings season we're getting ready to step into. And there's always the concern of, are you running a hot market into earnings season, which we were. So a little bit of a pullback may not be a bad thing to let earnings kind of take that and move it forward as well. But right now, we're still seeing higher highs on the S&P. We're getting that slightly higher high on that move up. So I'm excited about where the overall market is going. But I do think between Powell and between what's coming up with the S&P 500, how it holds up from that news through earnings, I think that's what's really going to help us going forward.
Got it. Well, I'm going to go ahead and pop up your charts here and let me know exactly what we're looking at, all right?
Sure. So the first thing up here, of course, for me is S&P 500. This is where everything starts right here. We've got to focus first on the S&P, get a gauge of where we're at. So we actually had an SPY trade only recently, Aaron, we've stepped back into taking some directional trades that we're holding overnight. Everything we've done for this year, all the way through the last trade of June, was the first trade we did that was an overnight trade. That was on Goldman Sachs, where we held it for multiple days, and we did well on it. We had an SPY trade. We did it aggressively, meaning we took less contracts. And today we got stopped out on the gap down from SPY. So we're taking out of that trade completely now, which is okay. And that's why stops are in place, is to take me out. I got out sooner rather than later, so I'm fine with that. But we did pull back, and we are right now underneath the 8 moving average, which is this pink line here. And I'm going to bring this in just a little bit more, make it a little bit easier to see. That pink moving average line is our 8, and we're stopped right at that 4,400 level, at least for right now. So that's a critical point right now. All 100-point levels on the S&P 500 for now. There's times we don't use them, but for now, with a lower movement, intraday movement on the S&P, under $50, we use these lines. When we get over $50 move a day, we don't use the 100-point levels as heavily. So we're sitting right at that 4,400 level right now. We're pretty close to the 8 moving average. There's a confluence there. If we can get a close here, this would be a good place for a small bounce. And then the key is going to come down to, do we get above the previous swing high we made here, where this orange bar is? Do we get above that swing high and put in a new higher high? Or are we going to continue to push and press down towards this low? And that really is, mission critical right there. Are we going to break that low there? Or are we going to break up through this high? One of those two is what I'm looking for. That will give me direction of what I'm doing next.
Yeah, I mean, so with the S&P right now, Rob, I mean, the Qs and Aspire, to me, like if you look on a daily chart, almost looking like a little double top at the let me see on the Qs, maybe more so than the SPYs, but still a little double toppy there. Would you almost be worried, like going short here, that so many people are seeing this stock formation forming and trying to go short? And I mean, like, does that ever happen, you think?
So the short here, I don't have a signal yet. We are still in, the way I consider it, and we're in what's called a bullish neutral bias. We're below our 8, above our 21. That puts us in a bullish neutral bias. We're still bullish, but we're going to just kind of take it easy. We're back in position number 1 in the chair. We're waiting for it to get back above that 8 moving average. So on Qs, we're just barely below it, below that level in there. We did not put in the higher high on the NASDAQ that we did on the S&P, though, right? So that is, if you're looking at it as a double top, it's a slightly lower top on the right side, where we certainly prefer that higher top on the right side whenever possible. We're getting a slightly higher high. So until we pierce, again, that would be that 357.5, until we pierce down through this swing low, I'm not looking at anything to the bearish side right now. Meaning directionally. I may day trade it, but I'm not looking to pick a direction right now to the downside until we break through on a close that 357.50 level.
Got it. That makes sense. So moving from the SPY, Rob, you got any like individual names you've been trading?
So today was a Roku day. And I have not done a lot with Roku lately. This was not the move I was expecting. I was very happy to pick up 40 or 50 cents on Roku today. But we got the gap down. We went from a bullish bias, very ugly bullish bias. Our moving averages were going sideways, which means we're not moving, right? So we were going sideways. We got the gap down, and I went from position 1 in the chair to position 3 in the chair almost instantaneously on that gap. And if we look at it from an intraday, let me go here to my trade station, you can see the gap down that took place. Now, that 5-minute candle, and that's what these are, 5s, that 5-minute candle does not give me a clear signal. I keep 4 charts open at one time, Aaron, and it's harder to see now because the market's moved. But the one on the left, the upper left, is a 1-minute. The one I just had open was a 5. I've got a 30 in the bottom left and a daily in the bottom center. So if we go back over to Roku, I'm going to flip this into a 1-minute candle and go back to the start of the day, just because you can see the fib line that's on there. So this is the Fibonacci level transferred from a daily chart. So we gap down, and these are 1-minute candles. 1, 2, 3 minutes, we just went sideways, no movement whatsoever. We pierced through on this 4th candle, closed below. We retested that fib line, and started to fail. Upon that failure, upon that pullback, we were able to take a bearish entry with buying a put. We did the $63 put on Roku today. And I watched Roku go down, and this goes into some of the what I call micro day trading strategy, where we are very focused on candle size and overall movement size. We had long wicks in here, big movement, and then we got down and we got this tiny candle. We got another tiny candle, and right around in here, we pulled the trigger, got out. Now we got a little bit further down. We didn't get every penny we could have out of the trade, but in at 70 cents, out at just under $2. Very pleased with the overall move on Roku. Trade is done. It was the only one that we actually took and exited today was this, but the setup was perfect for what we were looking for. Break the fib line, retest, and bounce. If you did it on the 5 minutes, you would have done it right off of that candle. I was just impatient, did not want to wait. I was looking to get in that trade fairly quickly.
Yeah, and I mean, you talk about this, Rob, a lot, where you want your moves and the trades to be happening like kind of quickly. You don't want to be sitting there too long waiting for this move. Can you talk about why that's important to you as a trader?
So I'm okay with anything that's happening up till usually 10:10. You get a lot of movement takes place in that first 40 minutes of the market. A lot of activity. Right out of the gate, market orders that were placed last evening are getting executed right out of the gate. Stops that were unexpected and/or targets that were unexpected are getting filled right out of the gate. You got a gap up, a gap down. So positions are being filled, and I want to take advantage of that momentum as quickly as possible. But I don't need to be in it per se right on the open. I just did not expect the retest. I thought Roku was going to drop and just continue to drop. I wasn't expecting the pullback in here today. Or I would have been fine sticking around. It's 20 minutes. That is the 950 candle. I'm okay. It's after 10:10 that the market really starts to slow down. We've already made 2 shift moves in there that have taken place. You get your directional move, a retracement, and then another retracement again, usually between 950 and 10:10. So as long as I'm within that area, that's my favorite time to enter. Once we get beyond that 10:30, there's no excitement any longer. It's what's going to make it just make a big move now from 10:30 on. Not that it can't move, but you can get the biggest moves earlier on in the morning.
Yeah. And I mean, I'm kind of the same way, Rob, with my trades, where especially if I'm looking at something as a quicker trade, I mean, obviously if I'm taking something as a swing trade or a longer term trade, I'm willing to, sit through some volatility. But if I'm making a quick options trade, I want to see, that action go in my way pretty quickly. Otherwise, I mean, sometimes I'll set stop losses that get stopped out pretty quickly. Other times, if I don't set a stop loss, then I'll end up, adjusting that trade pretty quickly if it's working against me.
Right. I'm spot on. That's exactly me. I would rather see the trade entered earlier. For me, my style doesn't mean it fits everybody, and that is for day trade. When it comes to swing trade, my biggest contention with swing trades, or any trade for that matter, is I don't personally take trades. Normally 11:30 to 12, somewhere in there is my starting point where I won't take a trade. And then I will not, from let's say 12 o'clock until 1:30, I'm usually walked away and I won't take trades. There's too much lower volume in there. And if I'm taking day trades, I normally will not take them after 2:30 in the afternoon. Right?
Got it.
It gets too late if it's a day trade. Swing trade, I like trading after 2:30, but not on day trades.
Rob, what about any other individual names outside of Roku that you've been trading?
So I missed Adobe this morning. Very disappointed in that one. I was doing something else that was not real important. And I missed the Adobe. It gapped down. It retested and failed. And I just missed the opportunity on that one. It wasn't a big move so far, but it was a couple of dollars inside of there. So overall, good setup, but not at this point. As I said, we recently did a Goldman Sachs trade where it was a swing trade that we did on Goldman Sachs, and we did phenomenal with it. We got taken into the trade on this day. We closed near a fib line right here. This was on the 20th of June, and we gapped down. So we had an order in to buy on this, and we got filled, not at a price we wanted to do, because we got filled on the opening price. It did move up. If I was watching it instead, it would have been a better setup, but I set it up to be able to walk away from it. We got taken out the next day on our first contract. We had 4 contracts, so we got taken out on 2 contracts the next day on the open. The day after that, we got taken out on 1 contract, not on the open, but pretty close. And then we got stopped out of our last contract on this day. We had 1 contract left as a runner. So again, first swing trade we've done this year and worked out well for us. It did exactly what it's supposed to. When you look at Fibonacci lines, Aaron, each fib line, I want you to consider one fib line distance from one to the next as a 1 standard deviation move. On average, and I don't know the exact numbers, I'm sure there are some mathematicians here that can give me the exact number, but on average, about 95% of all data points happen within a 2 standard deviation move. So by the time you move 2 fib lines, you've already got almost all of your data points are out, meaning I want to be out of the majority of my trade, 70% is my number, by the time I make a 2-line move and be done with it. So we get 1 line, 2 line, you're always going to get a little more, right? We got that 2.5 line move and we got the bounce from there. I hold the runner in case we get a continuation run. We've had it where a 10 contract trade, we made more in the last one than the first 9 contracts combined.
Got it. Well, so Rob, let's take a day like today, like example where, you know, market open lower with this economic news, fears that the Fed's gonna have to keep raising rates. Since kind of this morning, markets have started to creep back up a little bit. What would be like a sign for you right now that, okay, you do want to get bullish, you do want to go long the SPYs or the Qs over the next couple days? Like what levels would we have to cross? Where would you want to play those?
So if we're looking from a SPY standpoint, one of the things I like a lot of SPY right now is we've got the 8 moving average and it's right near this fib line, which is 440.08. So there's a confluence of those 2 levels. So if we can get above that 440.08, retest it and bounce, I'm willing to take a smaller position as an entry to get into a directional trade with a goal of that 445.22, which is a fib line, as my target. But I would be very cautious to tighten my stops at the swing high that came in on the 30th of June, which was 440.30.
Got it. Well, I mean, yeah. So, I mean, I mean, it's just so tough because on one hand, you have, I think if you didn't have the fact that we were already in this kind of like big rally up until this point where maybe a healthy pullback would be necessary anyway, that it would be a great buying opportunity because again, I mean, like, if you told me you can buy stocks, you can buy, you know, the S&P 500, you know, great U.S. companies at a time where the U.S. economy is doing well, where we've been stronger than anticipated, that seems like a good buying opportunity. But right now, of course, you have the other side of the spectrum, which is that the Fed is now expected to be able to keep raising interest rates. But I mean, for me at least, I think for people without a longer time horizon, if you are just buying and holding, investing, that opportunities like this are buying opportunities.
Exactly. So the buying opportunities are pullbacks, and that's what we have here. We moved up, we got a pullback. We got back above the 8, there's the buying opportunity. We pulled back, we bounced, there's the buying opportunity. Right? Never catch the falling knife, right? Don't, you know, you're walking down a street in New York City, you see a piano falling from the 30th floor. Don't try to brace yourself to catch it. Get out of the way, let it hit the ground, pick it up. It's no different, right? Let this hit ground. We've got a fib line and a moving average there. Let it bounce. And if it does, I take it there. If it doesn't, then I'll wait for the next move and reassess what that is based on where the fib line is and where the bounce comes in from.
Got it. Well, so how are you? What are you? You know, I mean, for the SPYs right now, you said you'd be waiting for a pullback and then looking to go long.
So I'm waiting for actually to move back above that 440.08 level, right? So I'd like to see it get up to 440 3/4, 441, somewhere around there, and then pull back, not all the way, but towards the 440. In other words, the bulls pushed it forward. The bears tried to take it back and it bounced. They didn't win. That would be my entry into the trade. And if I'm wrong, my stop is going to be somewhere down below that 8 moving average where I don't have a lot of risk in the trade.
Got it. That makes sense. So Rob, yeah, I mean, any other hot takes when it comes to the market right now? I mean, you've got some of these AI stocks that are still pretty overextended. Any other big things you're watching or looking for?
Yes. So I am very big fan right now with the announcement of Meta's platform, which I saw you guys talking about as I was in the waiting room there. I think that this could be a catalyst for Meta. I understand. I heard all the things you guys came up with of the advertisers and all of that. And I think that, the thought is get it out there and get people acclimated on it, right? You're gonna have your rampant Facebook/Instagram fans are gonna grab it no matter what. I did download it earlier today. I haven't set it up yet. There's over 100,000 downloads already on it, on the platform. So I think that it could give Twitter a run for its money. I don't think they'll ever take over Twitter personally. I don't think Musk, he's too smart of a businessman to let that happen. He'll do what he needs to keep his platform going, especially with all he's got invested in there. But I think this could be another catalyst for Meta. I am very critical of Zuckerberg. I have not been a fan of his. I don't, never have felt that he was the right person for the CEO job. But I got to tell you, what he's accomplished from where he brought Meta, from where it got down to, under $100, and it's over, $200 now, $300. It's been an amazing move for them. He's done a great job of it. And I think this new platform for them could be the next catalyst.
Yeah, I mean, Zuck and Meta have done a great job when the market kind of shifted from, okay, the market was, for a long time rewarding which companies could grow the fastest. And then the market switched to, okay, now we're going to reward companies who can cut costs and prove that they're profitable and make a lot of money right now. We don't want to invest in companies that you got to wait 10 years for them to really start bringing in the dough. So, Meta kind of ran a textbook example of how to cut costs, how to transfer, or how to, kind of change toward profitability as opposed to growth. And, so you got to give them credit where credit's due. I think, like you said, there's a lot to be critical of. I think a lot of people will continue to be critical of Zuck and Musk and basically every other big tech billionaire that has a lot of influence, because throughout the past 15, 20 years, these guys and these companies have been growing in influence, whether it's just how much visibility we see in our daily lives of, Twitter and Facebook and Apple, or, just in terms of like the control of how we take in information, all these things. So I think, that will be hopefully a good almost guardrail, is the public being, very critical of what Musk, Zuckerberg, all these guys are doing.
Exactly. So right from there is my biggest reason for Meta right now. And I'm looking at them a little bit longer term. My top 3 stocks that I personally trade are Tesla, Netflix, and NVIDIA. And Netflix and NVIDIA are on my list right now as watchers for right now, because again, we're sitting right near, this is Netflix, we're sitting right near the 8 moving average and that fib line. If we can get that bounce, there's a great opportunity, and my risk is down below that low price from today's candle. So I don't have a lot of risk in there. So here's another one, folks, and you can trade Netflix, especially today or tomorrow. You could trade Netflix for dirt cheap right now because of the options expire tomorrow, right? So if we look at Netflix, look at a Netflix option, and let's say we get a bounce, so we're bullish. We're going to find a 65 delta, which we have right here. There's plenty of open interest, 467, over 2,000 contracts in volume today. We could buy that option right now for $560, which means if you wanted to trade Netflix, $560, you're in one contract, right? Very doable, okay? And come tomorrow, that same $550 is going to be more like $4, $4.25 in the morning tomorrow, right? Just because of the expiration. But if I'm trading it for the day, I don't care. I'm in, I'm out today. I don't need an option that goes out for weeks and or months. But where they're sitting right now, Aaron, they're setting up perfectly.
Got it. Well, Rob, always great to have you on the show. Get your takes. I mean, this market is crazy right now. I think we'll have. I just have a feeling we'll have some pretty interesting conversations in the next couple of weeks. Again, as we get more economic data, as we see how the market responds to these things. Quick checkup on before I let you go. Yeah, it looks like Qs have been trading up since about since right about when we started the show at like 11:20 a.m. Eastern, but now, coming back down a little bit. I'll be curious to see how the market continues to trade throughout this afternoon into tomorrow morning.
Yeah, absolutely. I mean, again, big fan of Qs and SPY. I love them both, right? But they're very much in a range at this point. They did get above their high for a half a second. We'll see where it all holds out, though.
Got it. Well, throw in the Trading Like a Boss link in the chat if you want to check out more from Rob, some free education there, Rob. Again, always a pleasure to have you on the show. Always great to see what you've been trading and what your takes on the market are.
Fantastic. Aaron, hey, have a great day. Appreciate being on.
Of course, Rob, you as well. All right, you guys, Rob Roy, tradinglikeaboss.com, joining us every Thursday. Always great to see what Rob's been trading. Of course, he's a master with those spreads and with those fib levels. So if you want to learn more about trading spreads, more about trading options, make sure to hit that link. Make sure to check out some more of that education there. And again, it's all free, so you have no real reason not to. All right, guys, we've got just a few minutes left of the show. We're going to wrap up here in about 5 minutes at 12:45 p.m. Eastern, as we've got some other, content we've got to film up here in the BZ headquarters. Stay tuned for that because it should be some fun little clips we're going to get. So I've got my man Nick Brown still hanging out. Going to go ahead and bring him back on for the last few minutes here to see if Nick's got any final words, thoughts, headlines, etc. Mr. Nick, how you doing?
Good.
All right, we've got about 5 minutes left. What do you want to discuss? I'm tossing it to you.
I was going to say, could you pull up Microsoft? There was a new upgrade this morning from Morgan Stanley. They raise Microsoft's outlook above $3 trillion because of AI. They upgrade their target to 415 from 335. And that is, I believe, the highest on the street. That's according to FactSet. 3 other Wall Street firms shared the prior street high target of 400. They're going to 415. In that note, they basically say generative AI looks to significantly expand the scope of business processes, able to be automated by software, and Microsoft stands best positioned in software to monetize that expansion, which accompanied with a still reasonable valuation makes Microsoft our top pick in large cap software. That's according to the new note released today. Their target goes to 415 from 335. And they also called Microsoft top pick because of the large cap software stocks, the company's strong positioning in the generative AI boom. So we're going to see this AI saga play out, this AI all together. And we're going to have to see how NVIDIA and Apple and everybody else does in this AI business. It's going to be very interesting how AI is shaped in the long term. And if there are going to be any limitations on, like, when you create an AI image, is there going to be a disclaimer at the bottom saying, hey, this is AI image created, or this is AI reviewed, AI incorporated? It's going to be very interesting to see in the long term, 5, 10, 15, 20 years, how AI is shaping up. Pretty soon, everybody's been talking AI anchors. I don't think AI anchors will be coming anytime soon. So, Aaron, we have some hope we will not be replaced.
Yeah, I mean, we'll see, Nick. For now, hopefully, I think there are a lot of jobs right now that people maybe start getting worried about. But I think a lot of that's a long ways away. Like you said, there are going to be a lot of different regulations and talks about, okay, what are the licensing rights like when you have an AI stock or if you have an AI generated image or an AI generated video. I think we saw already in the political sphere, people using AI generated political ads and things like this. And, what's going to be constituted as okay, what's not going to be okay. I mean, here's the thing. I mean, when you have a guy like Sam Altman, who's the head of OpenAI, the leader, essentially the dude with the most influence in terms of what's going on with AI right now, he's going out there to Congress and talking to elected officials, basically begging for more regulation, saying we need more regulation, which is very atypical. Typically, you see business leaders in their respective industries saying, no, we don't need more regulation. We don't need more of this red tape. We don't need to make things harder for us. Our industry is fine. So the fact that Sam Altman's going out to Congress on his own and asking for more and more regulation, proves to me that the people with more knowledge than I do have some of these maybe concerns about, okay, yeah, this technology is great. Yeah, this technology is going to help us a lot, but we need to make sure we are doing it smartly. We need to make sure we are doing it in a way that does not become detrimental for, everyday Americans. And I think that's very, very important right now.
Yeah, it's going to be very interesting to see what other companies can use AI and AI in the long run. Just basically how AI is going to shape the world, like colleges, schools in general. Is AI really going to be helping children with their homework? Because we saw with Chegg in their latest quarter saying that they had to bring down the estimates and people were moving to AI helping with homework.
100%. Well, all right, Nick, any final headlines, any final thoughts for the day?
I was just going to say, Wall Street Journal was out with a piece around 11 this morning about DoorDash, Uber Eats, and Grubhub suing New York City over minimum wage law. We alluded this to the beginning of the show, and I dug through this Wall Street Journal report, and there's a new law starting July 12th, and that law requires that the companies either pay workers around 50 cents for every minute they spend on a trip, or pay them a minimum of $17.96 an hour for the time they spend active on each app. The latter works out to around 30 cents a minute. Both rates exclude tips. And so workers are currently paid a rate per trip that is set by each app. Tips are earned on top of that. DoorDash, Uber Eats, and Grubhub don't employ drivers who are considered independent contractors or so-called gig workers.
Got it. Well, Nick, let's discuss tomorrow. Maybe we'll have to record a quick video or something after the new jobs data comes out tomorrow, because we're going to have some interesting things going on there. So, Nick, as always, thanks again for joining us on Benzinga Live today.
No worries, guys. And Aaron, I don't think I'll be joining you at all next week, Kevin. I'm on vacation in New York. I'll be back for Friday, but I may have to pop in here or there if anything big happens. So I will see you in 2 weeks.
Beautiful. All right. Well, enjoy your vacation in New York, Nick. Again, thanks for hopping on today.
Thanks, everybody. Have a good one. Have a good weekend.
All right, everybody, smash the like for my man Nick Brown. Always giving us some great headlines and his thoughts on the market. Again, hit the like if you have not already. Please subscribe to the channel. This stream will redirect you to our cannabis stream starting up here in a few minutes, so do not go anywhere. With that, peace and love, y'all. Happy trading. And we'll be back again. We'll probably do something tomorrow for this jobs report. I don't know exactly what that looks like yet, but if not, then for sure back next week. So again, I hope everyone enjoys the rest of their day. Happy trading. Stay green. Peace and love, y'all.